In today's video, we're going to be going over how to exactly trade the ICT AM and PM session macro times. Let's get straight into it. Okay, so first things first, let's start off with what even is a macro in the first place. A macro is literally just a period of time where price is expected to start an expansion, move higher or lower. So what usually will happen is that price will draw towards two things. These two things can either be an old inefficiency in a premium or a discount, so that could be a fair value gap, or price will draw towards liquidity and raid buy stops or sell stops. So in short, this is basically what a macro is, and during these small periods of time you will usually get an entry model that you can take advantage of. So hopefully that makes sense, and now we're going to go over the actual specific times that these macros occur at. Okay, so let's go over the first example, which is actually going to be the 950 to 1010 silver bullet macro hour. So I've marked out my buy side and sell side liquidity levels here, and now I'm waiting for a sweep of liquidity and then a displacement and some sort of PD array to enter off of during this 20-minute time window. So let's see how this plays out. Okay, so buy side liquidity has now been swept. Now I'm anticipating for a displacement towards the downside, breaking below the swing low here, and potentially a fair value gap that we can enter off. So let's see what we get. Okay, cool, we've displaced lower. So now what I would do here is I would mark out my fair value gap here, and I would wait for price to retrace. And usually best setups, you'll get an entry at exactly 950 into this fair value gap, right? So in some cases, like this one, we actually didn't get a re-entry at 950. We got an entry at around 9:46, 9:47 a.m. New York local time, which is still valid. I usually tend to enter trade maximum 5 minutes before the macro starts. Ideally, you want to be entering between these time windows, but if the setup is very, very clear like it is here, you can enter like 5 minutes before. Okay, so let's see if we get an entry. Okay, so we actually get two entries here, 9:45 and 9:46 a.m. New York time. So I'd be triggered in short here, stop loss, minimum stop placement above the displacement candle's high, or if you want to be safe, above the swing high here, up to you. And my take profit would be these equal lows down here. So let's see how this plays out. Okay, look at that, absolutely lovely. Take profit would have been smashed there in around 3 minutes tops, right? So you're not in that trade for a very long time. And I just wanted to show you these Telegram chats as well, just for transparency reasons. We actually took this trade in the live signals room, so I just want to show you how precise we are with our signals. So I'm actually in a different time zone right now. However, this time here would be at 9:47 a.m. New York time, which is around the time that price went into that fair value gap. So as soon as it trades in there, you get my short entry signal, you get my stop loss, which was above the displacement candle's high, my take profit. As you can see, take profit smashed, 35 points secured. So this trade actually went quite quickly. Not all trades will be like this. However, the members inside still managed to make money with me on this one. So congratulations to everyone inside who caught that. But yeah, I just wanted to show you these Telegram chats so you can see how precise and accurate we actually are with our signals. Okay, so now that we've gone over the 9:50 to 10:10 a.m. session macro time, let's go over the second one. Okay, so this is example number 2. Now we're going to be going over the 10:50 to 11:10 New York AM session macro times. Now you're going to mark out your obvious swing highs, swing lows. This is your buy side and sell side liquidity levels. So now we want to wait for either one of these levels to get swept, ideally prior to the macro time. However, in some cases, liquidity can be swept during the 20-minute time window. Okay, so let's see how this plays out. Okay, so buy side actually gets swept in this example here. Now we want to see a displacement and a fair value gap. Okay, so as you can see, I mean, there's a little displacement here you can enter off, but we're not in the macro time yet, so we're not going to enter. Okay, this happened at 10:30. It's too far out the macro. If this happened at 10:45-ish, we could potentially consider entering, but 10:30 is just way too early to enter, so we're going to wait for 10:50 to 11:10 macro here. Okay, so the price is actually coming back up. Let's see if we get a more clearer displacement. Okay, and there you go. So this right here, I would count as a displacement. We broke below a swing low, and we're entering the 1050 to 1110 macro. So this little fair value gap here would be your entry. Okay, and I'm pretty sure as well, I remember trading this at the time. This was actually a SMT on ES. So if you don't know what an SMT is, pretty much it's a smart money technique or smart money divergence. All it means is that here NQ didn't make a higher high, however ES or S&P 500 made a higher high. So this is a divergence between the two correlated pairs. As you can see, NQ is showing more weakness as it didn't have enough strength to even break this high. ES did, NQ didn't. This is another confluence towards our trade. So this is actually looking very, very good here. Stop loss, I would, in this case, I would put above the swing high as you're not risking a lot of handles here, guys. So I mean, you could do a 3-handle stop, but you need the trade to breathe, right? So I'd put up the swing high, you're risking around 12 handles. And my take profit would be down here, which is 82 handles, okay? So let's see how this plays out. And if you want to be safe, you can take partial profits below this sell side level here. Okay, so partial profits would have taken here, and put your stops to break even, as you don't really want to be risking. Jesus, right, okay, price is melting. This is amazing, okay? Let's see how this plays out. I'm pretty sure sell side will get hit. This is actually a 6.5R trade, crazy. Okay, so sell side got tapped there. TP would have just about been hit. So that's 82 points, guys. 82 points, you know, that is a crazy, crazy trade. And that is why I like this 1050 to 1110 macro, because the silver bullet macro is good. However, it will rarely give you an 80 handle move, right? It will just give you a 25 to 50 handle move. And then this macro here, which I actually prefer trading over the silver bullet. I mean, it gives you way better returns compared to the silver bullet. I mean, look at that, right? 82 handles, it's just amazing. So I prefer trading this one, but you guys can trade whatever you like. So now that I've gone over the 2 New York AM session macros, let's start to go over the PM macros, and I'm going to be explaining them more in depth in the next slide. So let's get into it. Just a quick reminder, guys, the live signals room is still available for only $30 a month. Prices will be going up very, very soon, most likely at the end of this month, as the members are making consistent profits every single week. Lifetime access is also available for a one-time payment of $250, and we do also accept crypto payments. Those of you that do not have access to a bank, so you get access to my exact exit and entries whenever I get into a live trade. So that includes my stop loss, take profit levels, full transparency. But yeah, the value that's inside this group is absolutely crazy. We've been smashing it this week, netting over 105 points on the week. So as you can see, this is actually Monday. We take a 40 handle win from this trade here. We take another win the next day, 30 points secured. Then Wednesday, we took a break-even trade. Next day, take profit smashed as usual, another 35 points. And then on Friday, we took no trades. There wasn't really much going on, but yeah, this is the results for the week. So as you can see, 40 points, 30 points, 35 points, but in total, 105 points up on the week. So this is the 4th week that we are closing out in profit, guys. And this week was actually quite unique. We had 0 losses, which is unbelievable. You know, some people don't believe that, but the transparency is there, guys. You can ask anyone that's inside my group. We literally took 0 losses, right? But yeah, if you guys are actually serious about getting your trading to the next level, I'd highly recommend you click that link in the description and secure a spot for only $30 a month whilst that price is still available. And remember, also my entirely free group is also in the description, so if you want to join that, feel free. Anyways, let's get back to the video. Now you want to go ahead and mark out your buy side and sell side liquidity levels from either the lunch or the New York morning. So this could be your lunch lows, lunch highs, or it could be your New York AM session highs and lows. which haven't been taken out yet. So I've gone ahead and identified my equal lows down here and buy side up here. So now we want to wait and see for one of these to get swept. So let's see which one get taken first. It looks like buy side is going to get taken. Okay, so now that buy side has been taken, I want to anticipate a displacement in the opposing direction, targeting these equal lows down here. Okay, so let's see if price decides to give that to us. No displacement just yet. We're entering that PM session macro now. Okay, so we get a little bit of displacement here, but not much of a fair value gap. I would wait for a more clearer displacement to happen before taking any of this. Okay, so let's see if we get a more clear displacement. Okay, so now we get a clearer displacement. However, as you can see, price didn't displace through this low here. So one could say this is a market structure shift, right? Me personally, cool. You could say it's a market structure shift. However, I wouldn't take this personally because we didn't get displacement through the low. So I wouldn't be very confident on this fair value gap here, right? So I'm gonna wait for a more significant displacement before taking anything. Okay, so let's see what we get. Okay, so now prices shown that we want to go lower and displaced through that low. So that to me is a more significant market structure shift. So usually now I would enter off a fair value gap. However, there is no fair value gap, so I'm going to enter off of this order block here. Okay, so let's wait and see if we get an entry here. Cool, so look at that. Look how precise that is, right? That's literally to the tick. Price ticked us in, tap the order block. That's your entry to go short. And my stop loss in this case would be just above the swing high here. So that's a 9 handle stop, guys, and the target would be equal lows at the bottom, 26 handles, nothing crazy. That's a 1 to 3 risk to reward. So let's see how this plays out. And obviously this is the PM session silver bullet, so I mean, don't expect a lot of handles, right? I mean, 26 handles is still a lot. Boom, look at that. TP would have been smashed right there. And ICT does say just aim for 5 handles, right? So 5 handles on ES is around 25 handles on NQ, because NQ moves about 5 times quicker than ES does. But yeah, there's your 25 handles for the PM session silver bullet. So now that we've gone over the PM session silver bullet macro, let's go over the last and final hour macro. Alright, so let's go over the last and final hour macro, which is between 3:15 and 3:45 PM New York local time. Now this is one of my favorite macro times because when this macro works, it works, okay? This macro usually gives you between 100 to 200 handles, which is a lot of money on NQ. So compared to all the other macros, which, you know, sometimes give you 25 handles to 50 handles, maybe 80 handles if you're lucky. This macro here, it works like an absolute dime, right? So price has been going down all day or has been going up all day, or let's say it's even been consolidating all day. Expect the final hour macro to have an insane run on buy stops or sell stops, right? Price will usually spool towards liquidity. As you can see, I've marked out my buy side and sell side levels. Now I'm anticipating for sell side to be swept here, so let's wait for a sweep of liquidity. Okay, so sell side has now been swept and we're approaching that 3:15 to 3:45 macro time. So I'm anticipating a bullish displacement towards the upside here. Let's see what we get. Okay, and look, as soon as we enter that macro, we're starting to displace higher now. Okay, we have a little short-term high here, so let's see if we can break above that with displacement and get a fair value gap. So we're still in that time window. The trade's still valid. Once price comes out of this time window, the trade's no longer valid and you should just close your charts, right? But as long as we're in this time window, you can still look for your model or setup. Okay, so no displacement just yet. Okay, so we're starting to displace now, and we've actually broken above a short-term high here. We're still in the 3:15 to 3:45 macro. Okay, so what I've actually noticed here is that this is a unicorn model, right? So I've actually teach this concept in some of my other videos and also trade it inside of the live signals room. But basically what it is a bullish breaker paired with a fair value gap. So This is one of the highest probable setups there is. So in this case here, we have a bullish breaker, right? Okay, and that is actually paired with a fair value gap. So in this case, the breaker is actually the closest PD array, so I will just enter market order straight away from the breaker block. You can always enter from a fair value gap as well. However, you do risk missing the move, so I'll be entering off this breaker block here. Now, since this is such a big price leg, I would actually mark it out from recent swing high to recent swing low and find the 50% of the range. So this would be your equilibrium, and I would find either a PD array like a fair value gap or a buy side liquidity level in a premium. So this is just a little bit above equilibrium. So this right here would be a good first partial profit target to take something off your position, and then you could potentially have your second TP at this fair value gap, which is in the premium here. If you enter off of the breaker, stop loss would be just below the displacement candle's high. No need to put it at the swing low. You can if you want, to be safe. However, you're already risking 28 handles in this, and usually my maximum risk on a trade is around 25 handles, so I don't really feel comfortable risking more than that. First TP would be here, so easy 1 to 2. Let's see how this plays out. Okay, so you'll be entering long right there. Okay, so it actually gave you an entry on that fair value gap, but I mean, let's say you had a limit order here. I don't think you would have got filled, right? Unless you market ordered this, I don't think you would have got filled on the fair value gap here, because it didn't really tap into it. It was a couple of ticks off, so that's a good thing that we entered off the breaker. But yeah, let's see if first TP gets hit. Alright, so first TP got hit. I would take something off here, so take one contract off, set your stops to break even, have your second TP here, third TP here, and potentially fourth TP here, right? This is quite a big range, but let's see if second target gets hit here. So stops at break even, risk-free trade. Let's just see what price decides to do now. Okay, so it gives you that second TP there, so that's a 2.5 risk reward, 75 handles there. I'd be, most of my position, I'd be out there because we're nearing the end of the day anyway. So it's 4 PM New York local time. Usually this trade setup will occur and you'll be out of your position by the end of the macro time, right? So, I mean, ideally you don't want to be in the trade after 3:45 PM, but in some instances like this one, you can be. You don't want to be holding past 4 PM, right? So I'd be mostly out of my position here. Maybe leave one more runner towards this high, but I'd pretty much be out there. So, I mean, let's see what happens here. See if that final TP gets hit. Yeah, and it looks like it's losing some steam here. But yeah, I think that would be it, guys. So that final TP never got hit, and as you can see, price just stagnates now. The market's closed, so you don't want to be in a position after 4 PM, right? So ideally, you want to enter at 3:15, and you don't hold your trade past 3:45. Okay, latest 4 PM. So hopefully that makes sense, guys. But yeah, guys, that is going to be the end of today's video. I hope you guys got some value out of this. If you had, please make sure to leave a like, leave a comment, subscribe and share. And lastly, if you guys are really serious about taking the training to the next level, please make sure to go and click the link in the description and join the live signals room for only $30 a month. Prices are most likely going to be going up by the end of this month, so make sure to secure a spot before that happens. All of the links will be in the description, so yeah, make sure to go check that out, and see you in the next one.